Okay, folks, welcome to the week ahead commentary. This is where we review the closing price action of the major averages. We'll talk about positions and we'll talk about strategy as we proceed into the new trading week. Now, when the CPI data was reported last week, we pretty much knew that there was going to be a rip your face off rally as we proceed into the back half of the week and in all probability into the end of the year, given that the pricing in of a 3/4 basis point rate hike in December is little to none. Now, while the headlines looked good, I think that we need to keep in mind that equities, are expensive. Why? After the devastating performance in 2022, earnings are declining, making stocks more expensive. Yields are higher than they were at the beginning of the year, making borrowing costs for companies that need to roll over debt more expensive. What does that impact? Earnings. Inflation. I went over this on Thursday night where we discussed the headlines off of Zero Hedge, which I believe was written by Bloomberg. They downplayed dramatically the inflation numbers, but let's face it, inflation is still running rampant. Why did equities get an extra added budge higher? It's because inflation on the wage front is not as great as what most people are concerned with. Normally, that would be, to the average individual, that would be a bearish thing to witness, meaning that real wages are not keeping up with inflation. Companies don't have to pay their workers more to keep up with the rate of inflation, but this is Wall Street. Wall Street likes bad news. They don't want companies having to pay their workers more because that impacts earnings, makes stocks more expensive, as sick and perverse as it is. Let's get to it. 10-year yield, weekly view. Let's face it, we are in a bull flag setup. This is not broken. Are we testing the limits of the lower band of support? Sure. We've been here before. We were here a few months ago with a long, protracted bull flag setup, which was resolved to the upside. We were back here, same thing. Back here, same thing. Daily view. Now, in a daily chart, it would appear that we're probably going to move lower on yields in the short term. We'll take a look tomorrow night on Sunday Night Futures Live as to what Fed heads will be coming out this week to give their speeches and possibly reining in equities with a well-placed comment to keep equities from moving too far too fast. Bond prices, they were above resistance, but they faded a little bit on Friday. But overall, they look good. It appears as though they're going to move up higher. I mean, this is a really serious downtrend and a counter-trend rally, which we haven't seen since the beginning of May through July, is certainly long overdue. Treasury inflation protected securities. Inflation is here. You look at only one chart. That one chart is this one. People are buying protection from inflation. That's why the tips are moving up higher. Daily view. Down day on Friday, rock solid day on Thursday on a inflation number that was supposedly, according to Bloomberg, tame. It wasn't. It was enough to send the tips ripping up higher. The dollar, a major break on the week, down nearly 4%, and it looks as though we are probably going to move a little bit lower here, but we are going to get a bounce at some point in time. Remember, stocks, commodities, equity, whatever you're trading, they're all cyclical. Watch 2850 on the UUP Dollar Bull ETF for support. Daily view. Daily view, we're leaning into the third standard deviation Bollinger Band. Expect a pop. Again, 2850, 2840 on the Dollar Bull ETF. That should act as support. Big distribution. As for the euro, we saw this coming. Huge breakout last week. Massive volume. I suspect that at some point in time, after a big move like this, we are going to get a pullback, a retrace. All of Europe's ills are not resolved. And that especially goes for the Japanese. This is a Japanese ETF, the FXY yen. It broke out last week after a long protracted downtrend. Volume continues to rise. The VIX weekly view broke support last week. We're still hovering above 20. We haven't been down below 20 since August. We're only there briefly. Daily view. So we're leaning into, or about to lean into, the lower band of support. So it appears as though, judging by the VIX anyway, that we're probably going to see a bit more upside on equities. We'll get a little bit of support at 22 to 2167 on the VIX, and then expect a defense of those levels. And that will be at least short-term bearish for equities. The Dow Transports, the canary in the coal mine for equities. The Dow Transports broke out last week above not one resistance level, but two resistance levels. And it also closed above a 50-period moving average on a weekly chart, up 8% on the week. A huge, huge move on light volume, though. Folks, volume was very, very light last week on the transports. Daily view. I mean, wow. We're going to need to retrace here. Up volume on Friday was very light, so do not go chasing equities here. The Dow Jones weekly chart closed above multiple resistance levels on a weekly time frame. Volume was strong. Daily view. Dow Jones was down most of the day on Friday. It eked out a gain. I don't like to see filled candlesticks near resistance. That implies that we're probably going to consolidate, possibly pull back a bit. Volume was strong. Remember, folks, we've come a long way very, very quickly. The Dow Jones, for its part, has rallied with only about a month, 18.25%. So please be very, very careful. The S&P 500 weekly chart, it too broke out above multiple resistance levels. We closed just shy of 4,000. Volume strong. Daily view. Daily view looking good. Next price target's clearly going to be 400 on the spiders, 4,000 on the SPX. Volume was good. So while I think that we still have more fuel left in the tank here, we need a two-sided market. We need a pullback. We need a higher low, and then see whether or not we could break out to new higher highs. And remember, folks, sorry to be the doom and gloomer here. Stocks are expensive. Now, do I think they're going up higher? Sure. Qs, weekly view, they closed up nearly 9% on the week. Massive move. We broke out above multiple resistance levels. Volume was good. Not great, but good. Daily view. Daily chart. We have a W formation. Here you have it. W, pivot point, 284.60. Here's the right side of the W, and we have a breakout above the pivot point. This is game on. Technicians are looking at this and chomping at the bit. The Qs want to go higher. Now, if we fail to hold 284.60, look out below. Volume on Friday was good. The banks, one of my favorite sectors, they are back above critical resistance. This is the XLF. We closed just shy of 36. Volume was very light last week. That's sad to see. Daily view. A really good week last week. Volume is okay. So with yields this high, the banks generally do very well. I still don't think it's time to get aggressive with technology stocks, not with the Federal Reserve still in rate hike mode. The however is profitability at the banks, it does well, or they do well, I should say, because of their NIM, net interest margins, the profits they make on their loans, expands with a higher interest rate environment. So the banks are looking good. Technology, strong week, up 10% on light volume. Warning flag on the track. Again, be careful of the sectors that you pick in this economic cycle. Daily view, up nearly 1.75%. Strong day in terms of price. We have a W formation just like the Qs, and we have a breakout above the pivot point. We did that on Thursday. Volume was okay. The semis up over 15.33% on the week. Is this a bear market rally? We're right there, folks. We're right at the upper band of resistance. I suspect we're going to get a pullback fairly soon. So it's at that point in time where we decide, okay, or we don't decide, the market decides. We wait and see whether or not we put in a higher low, consolidate, and then ultimately this gets resolved to the upside and we begin to put in new higher highs on the day, on the week, etc. Daily view, up over 3.25% on Friday. We're leaning into the third standard deviation Bollinger Band. This is a short. You're going to see selling. If they gap up the semis on Monday, we'll be looking to lean into the short side to try to scalp a trade. Volume, very heavy. Let's see how they close out the day. 30-minute chart. Extended, not horrible. Stokes are rolling over. A little bit overbought here. So, again, I suspect we're going to see some red futures action on Monday morning. That's not a horrible thing. It's a good thing. If they don't provide that red futures action, well, if they gap the semis up higher, I think that we could lean into the short side. Very briefly, LABU, of which we have a position. A great week last week, up 16%. We broke out above resistance. Volume strong. Loving the cup handle breakout on RSI. Daily view, RSI above 50. Stokes rising. Looks as though we are near a breakout point. LABU looking very strong. Consumer staples, they too moved up 2.33%. Resistance not too far above. Daily view, a down day on Friday. Not much going on here. This is a defensive sector. What really has me interested are the discretionary names. They had a very good week last week, but let's keep in the back of our mind that the consumer is making less relative to the rate of inflation. They're putting more money in their gas tank. More money is spent at the supermarket. The discretionary names are going to have to suffer. People are maxing out their credit cards. So this is one of the sectors we'll be watching to see for weakness. And this may also be, along with the transports, a canary in the coal mine for the direction of the market. I suspect that this is going to be one of the first areas to see weakness. Daily view. So we had an undercut double bottom. No breakout yet above the pivot point on this W formation, 48.32. Volume on Friday was light with price action, which is up over 2.33%. Warning flag on the track here. It's a pretty chart, but remember, this is one of the few sectors and possibly the only sectors that have broken down below not just the October lows, yet the June lows as well and closed there. We do not forget our emerging market trade, ex-China, again, no China. It rallied nearly 5.33%. It broke out above resistance on big volume. Daily view, really nice performance here. It's a little bit extended relative to the 3 standard deviation Bollinger Band in red, volume strong. Very nice. Energy had a rough week initially, but it did rally to close positive. The chart remains strong. Volume is drying up. Daily view. Be careful here. We had a breakdown of this ascending wedge formation a few days ago. This gives me the willies. I think it's a short covering rally or a sector that's rallying along with the rest of the market because it has been a leader. I'm suspect of this move up higher on energy. So just be careful. And oil, which is traditionally correlated with energy, or vice versa, I should say. Energy is more correlated with oil. For its part, it was down on the week. So again, I think that the money flowing into energy was a FOMO trade for energy stocks because, again, they have been leaders. We need to pay attention to the performance of oil relative to energy, and oil was down last week. Daily chart oil. It managed to recapture support on Friday, but to me, this is still reminiscent of a bear flag setup on oil. So, warning flag on the track. Both lines on Stokes down below 50 after putting in a lower high on Stokes. Rallies tend to fade. As you saw a little bit on Friday, volume is okay. As for Boyle, it gave us a bit of a headache last week. It was down on the week. Now, we do have covered calls that expire on, I believe it's the 16th of December. Now, one strategy may be is to sell the common shares and stay close to the money on the common shares in terms of selling puts, like sell the common, sell a put right at, say, 30 strike, collect that premium. The December 16s, they're still 30 days out. So if you buy back or they are assigned to you on the 16th of December, well, then you collect the tax loss. Check with your financial planner, check with your accountant. But it's beyond that 30-day window. And if the shares are assigned to you, you get them back, you can take the tax loss, and you be long again at a discounted share price, again, if assigned to you. It may not be assigned to you. Big volume last week. Daily view, a rough day. An outside reversal bar on Friday. We held support, a ton of volatility. But I think it's important to understand is that with all this volatility, we haven't broken to new lower lows. We're holding support here, which is why I'm reluctant to go selling the shares. Stokes are declining down below 50. Expect rallies to fade. Let's go to a 30-minute chart. See how we closed out the day. Actually, let's go to a 4-hour chart. Get a feel for what we're doing on an intraday basis. You know, we're holding gains here. Excuse me, we're holding support, not gains. The thing with natural gas, just so volatile. Hourly chart, no real formation here. It's just like a noisy, jumbled mess of a chart. 30-minute view. See if there was any accumulation in the final half hour of trade. Not really, no. They just limped it off the lows of the session. Somebody's trying to break this thing. They keep hammering it at the open. Except here, that one big move up higher. It's insane, the volatility. Okay, gold up 5.5% on the week. We'll take it. This really made our week last week. Not so much gold, but the gold mining stocks, silver mining stocks, great volume. Really nice week. Daily view extended here. We've come a long way very quickly. This is a crash up. So expect a pause here. Probably when we get the rally in the dollar, it's going to happen. Dollar's a little bit oversold. GDXJ weekly chart up 11% on the week. We have a lot of this. Volume, very strong. Daily view, a little bit extended, but there's more room left in the tank here, especially longer term. So the daily chart looking very strong, but a little bit extended. NUGT, we were up nearly, I don't want to say, it's hyperbolic. We were up, I was going to say nearly 30%. I don't want to be hyperbolic. We were up over 27.33% on the week. An amazing breakout. Volume strong. Daily view. Quiet day on Friday. I suspect we're going to consolidate here. Again, we're going to get a rally in the dollar. That'll provide an opportunity to perhaps add more. If you're not long, open up a position. But very strong price action. As for our silver trade, weekly chart, we were up over 7.5%. We broke out on the week. Stokes strong. RSI strong. Very nice. Volume good. As for our silver mining play, we're up over 7% on the week. It broke out the week prior to last. It retested the breakout point last week, held it, and it appears as though it wants to go higher. Volume very strong. Our uranium trade up around 7.5%. Higher lows on stochastics. Volume good. Daily view. A bit of resistance at the 200 period moving average. The 50 period is trying to flatten out. Stokes rising, RSI rising. So the momentum indicators are looking good here. It's going to take time. It's going to take backing and filling on uranium. Okay, our options trade on Netflix. We have the 315 calls to the upside. I have not rolled up to 235 puts. I'm reluctant to do so. If we get a new weekly higher high, I'm probably going to be forced to adjust that put side higher. We're going to see a deterioration of time decay here. Ideally, we're out of this trade with a profit, and we already have a profit on it. We're out of this trade in the next week or so as time decay really begins to ramp up. Daily chart, beautiful breakout on very light volume. This is really surprising. I mean, it was a no downtick day on Friday, yet there was no volume. Very odd. Let's go to a 30-minute chart, see how we closed out the session. 30-minute chart. RSI at 82. We closed strong. We have a lot of overhead supply from back here. Expect some backing and filling, and we want that, right? The longer we back and fill, the more time decay evaporates the value of the options. As option sellers, we like that. We don't want a lot of price activity. We're greedy. We want to sell expensive options, and we want the stock to do nothing and sip Mai Tais, although that's rarely the case. All right, so Netflix looking good here. Coinbase, we opened up two positions here. One was a 10 delta Strangle. We sold the 27 puts. We made a quick 50% profit on that trade. We sold the 85 strike. We did those at different points of the day. The shares had sold off in the morning. I sold puts on weakness. Then as they went positive, I sold the calls at 85 strike. So that is our Strangle. Now, we still closed down on the week. We have resistance at $60 a share. And we also sold puts expiring next week, fat premiums, daily chart, and that strike is at the 56 strike, 55 or 56. I had to take a look at the account. Volume is really, really good. 30-minute chart. They had a very strong close. Nice. A little bit of selling pressure in the final minute. Great Stokes. They're a little bit overbought, so expect a pullback. If they gap the shares up higher, I'm probably just going to scalp profits on those puts. Amazon, weekly chart. It's a beautiful chart. Bullish key reversal bar. Now, we had a strangle on this position. We initially entered it as a ratio strangle, meaning that we had more calls which we sold versus puts that we sold because we were bearish, and we were right on that call because the shares got hammered. When we rolled up, I should say we rolled down the call side multiple times. The problem for us here is that we didn't expect this type of reversal bar, and we're a little bit too close to the money. We're at the 102 strike to the call side. So now that ratio strangle, which was converted to a normal strangle, meaning equal number of puts versus calls after that CPI report on Thursday, well, we had a continuation move up higher, so I converted the strangle to a straddle. We brought in a lot more premium to help protect that 102 strike, because I do believe we're probably going to head up higher before options expiration. Ideally, we get a pullback, higher low, we see some time decay, and we just close out the trade. But we needed to get defensive, so that's why we did what we did with the straddle trade. And that is it for this week, folks. Everybody have an awesome remainder of your weekend. I'll talk to you tomorrow night on Sunday Night Futures Live. Be well.